The following is paid programming. Welcome to Something More with Chris Boyd, certified financial planner practitioner and founder of Asset Management Resources, LLC, a registered investment advisor firm. We call it Something More because we like to talk not only about those important dollar and cents issues, but also the quality of life issues that make the money matters matter. Here he is, your fulfillment facilitator, your partner in prosperity, advising clients across the country, your host, J. Christopher Boyd.
I'm here with Jeff Perry, my co-host throughout the show, and thanks for being here, Jeff. We had wanted to talk about a variety of things before we do. We're going to talk a little bit about some year-end tax planning and things to be mindful of.
How exciting.
Yes. High energy. Before we do, I just want to remind everyone, if you don't listen to us on podcast, we're posting our podcasts even before we post it on the radio show for portions of the show. So go check us out, become a follower, and wherever you like to listen to your podcast, whether it's right here on iHeart Radios, their podcast offering. We can do it through your Apple podcast on your iPhone.
Spotify. I use Spotify and Amazon.
Yeah, I am on. I'm kind of on all of these.
I know.
So, it depends on certain kind of things I listen on this one, certain kind of things I listen on that one. But anyway, we're pretty much wherever you might find your podcast. So
more and more, Chris, people, for years, people would say, "Hey, I heard Chris Boyd on the radio," and they still say that, obviously. But more and more people are turning to podcasts.
I think that's the case, and I don't know about you, Jeff, but I tend to listen a lot more to podcasts than I do the radio these days. So because there's so much selection, and I can
do it on my own time, right?
Yeah, when I'm ready. So in any case, we'd love for you to be among our followers that way. And if you care to, you can give us a rating and perhaps a review with a kind comment.
A 5-star review.
Yeah. 5-star rating. All right. Well, in any case, thank you for that brief set aside. And I will mention as well that, as we talk about some of these topics that we're going to be discussing, if you have any need for assistance in thinking about your planning as you come close to year end, don't hesitate to reach out to us. We may be able to be a resource to you in thinking about your financial planning or your portfolio management, whatever is a priority to you. So, Jeff, where should we begin?
Well, I want to spend a little time. We can do it in the beginning. There's some changes to the Massachusetts tax laws, a few things. Do you want to do those first? Or do you want to do
let's just hit on those because that's relevant, particularly for most of our audience who listens in Massachusetts.
The big one,
where we're primarily located. Yep.
The big one, the headline was the estate tax has doubled to $2 million. And if you didn't listen to the show or the podcast from a week or so ago, go back and listen to one with Keats Boyd, attorney Keats Boyd with Boyd & Boyd PC. He went into detail for an entire segment on what this means and ways to think about it. And so it's more complicated than you would think. But Keats Boyd offers some great thoughts. So go back and check out that podcast or radio show. It's worth your time. You'll be much better informed about the opportunities and challenges.
Yeah, and he often makes very complicated topics more accessible when it comes to.
He sure does.
Tax planning can be, it can be complicated, and you need sometimes to kind of put it into context. Why is that relevant? How's that? How do we plan around that? Yeah.
Tax planning in the context of an estate plan really gets complicated.
It does get very complicated.
And if you have property in different states, which a lot of our listeners have places in Florida, so I'm trained as an attorney. He's my expert.
I mean, that's a good point.
Yeah,
he's got a real focus and expertise that can be of help to people. You can find out more about Keats and his firm at boydandboydpc.com if you want to check it out on the web. But in the meantime, let's continue on.
Yeah, most of the changes that I'm going to briefly go over have to do with people of lower income. The senior circuit breaker, which is something Massachusetts has and has traditionally allowed a $750 tax credit to seniors of low income who have housing expenses over a certain limit. Well, this new law beginning in 1/1/23, so good for this year that we're in, allows the maximum senior circuit breaker tax credit to go to $1,500. So that's a positive.
Yeah,
Uh,
who doesn't like? That sounds good. Yeah.
and also thinking of seniors, I know quite a few seniors across the Cape, especially looking to reduce their property tax bill. Um, work as a volunteer, maybe in the town hall or the council on aging, and somewhere in the community, and they get a tax break.
Oh, nice.
This provision of this new law that just passed on the state level increases the local option so that your community has to adopt it for volunteer services of persons 60 years and older from $1,500 a year to $2,000 a year. So
Nice. Nice. So it can help,
it,
but it's up to the town to implement that change.
that's right. It was still $1,500, a great opportunity to cut your tax bill and serve your community. So I think it's a great option for people.
That makes
Uh,
sense.
people who are renting.
Probably those people work in the election booth, the election thing.
No,
I
could be. I think they're
wonder.
paid though. If
Those are paid.
my
I thought
memory is they
those were
get a stipend.
volunteers. I thought those were
Yeah, I think of people who like serve as greeters or at your town hall, or maybe do things at
Yeah,
community events, things like that.
yeah, that makes sense.
We lived in Sandwich, and there were several people who were friends of ours who took advantage of it, and they got something out of it other than a tax break. They enjoyed themselves, right?
I get that sense too. The people who work the elections, for example, I think
Mhm.
they just do it because they're passionate about it, and they're civic minded,
We've had Taylor White, who's my former chief of staff when I was in the State House, on the show a few times talking about elections, and I know he's always in Sandwich, always looking for people who are interested. It's it's not big money, it's not many days a year, but it's a good community service.
That's nice. Yeah.
Rental deduction in Massachusetts, so the amount you can take off of your state income tax for rent that you pay, has gone up from $3,000 to $4,000. That's a deduction, not a credit, but it still will save you a little bit of taxes at your state return.
Yep. Yep.
And one more thing, a child and senior dependent credit. So this is a credit that's $180 for a dependent, could be a child or a senior. The new law eliminates the cap on the number, so you could have, and it increases the amount. So the old law had a certain number of dependents you could claim. I think it was 2. Yes, it was 2, and now you can claim unlimited number of dependents, and the amount's going up to $310. So, and then to $440 in 2014. So a little bit, and those are credits, not deductions. So they tend to have greater value on low income individuals.
Yeah, credit is better than a deduction.
Right.
It's
So if you're
actual dollar for dollar coming off your tax bill, whereas a deduction is a percentage of your percentage reduction based on what tax bracket you're in.
Yep.
All right. So
all of those things, if you're a senior and you want more details, I'd say talk to your council on aging. I'm sure they have very specific details or information about those programs.
it's a good suggestion. Go through the you can go through the
Shine.
centers and
Yeah.
things like that. Yeah, Shine is we're definitely going to talk about that again too. But since you brought it up, I will
Yeah,
mention
you should.
this time of year is the time of year that I don't know if you've seen a lot more
How
advertising.
can you not? If you have a TV.
So what is it, December 9th? I
Yes.
think it is 6th, 9th. Anyway, it's the open enrollment period for your supplemental plan, your Medicare type insurance. That if you have a supplement or if you have an HMO approach, any of these, it's your window to register for your change.
Yep.
And
December 7th, Chris, you're right. December
thanks,
7th. Yep.
7th. So there's a ton of advertisements this time of year, and some of them are grating, right? It really gets annoying, but
I'm not sure they're all true. I don't know.
yeah,
Some of them seem too good to be true.
well, some of them are a little bit of a fiction that they're trying to lure you into whether or not it's really valuable to you. But here's my thing. If you're thinking it would be a good idea to review whether you have the right choice of plans,
Right.
There's an organization, it's referred to as Shine. It's the initials. I forget exactly what it stands for, but you can look it up on the internet or on in the phone book if they still have those under Shine. And your best bet is probably to connect with your Council on Aging or your senior
Absolutely.
center, because they often have hours where members of Shine can be available to you to help you figure out. And what's really interesting is they'll take into account uh, what kind of medications you take,
Yeah.
questions about your physician and so
Do you
forth,
travel? All those things.
and help you figure out and would navigate which plan would be a best fit for us.
Hmm.
It's an expertise that it's not something we are trained in. These are people that really have done a good amount of understanding of all the different plans and how they work. So take advantage of it. What a great resource to be available when you're thinking about
Yeah.
this.
These are people who are funded and supported, so that's free to you. It's a elder affairs program, and Shine stands for Serving Health Insurance Needs of Elders. So right
There
on
you go.
target. Yep.
There you go. All right. So, in any case, a little bit of a digression. We were also going to talk about, year-end planning when it comes to tax considerations. I think that was where we wanted to go, right? So, what are some of the things that there's still time to deal with? That
Hmm.
as we kind of
There's a lot of
enter
things.
the
Yeah.
last couple, months of the year here, we're
Hmm.
well into November now. So, um, time's running out, but what can we do that we might want to deal with
Right.
before the year ends? Jeff, you want to start, and
Yeah,
we
I've
can
got, I've,
back and
I've
forth.
got, I've got two big ones. One to think ahead, and one to make sure you don't get in trouble to start. If you have not fully funded your IRA or your employer plan for the contributions that you can make in this calendar year, and you
Yeah,
can afford it, it's the perfect opportunity to do that. I mean, the funds that you put aside now in your retirement plans will pay dividends, quote unquote,
yeah.
will pay off for you in the years to come. So if you can contribute the max, it's a great time to think about that.
Maximize
And
your savings and your matching and
absolutely,
all that. Incidentally, just on that though, before you move on to something else,
yep,
it's important to recognize that when you're trying to contribute to your employer plan, that must be done through a salary reduction, deducted from your paycheck.
sure,
So, if you haven't fully, contributed, and there's more that you can do, and pay attention to those numbers. And if you don't have those, reach out. We can certainly provide you. It's very accessible to identify what the max amount you can do prior to age 50, post age 50, et
right.
cetera.
Catch
But
up provisions, yeah,
you may get some opportunity to take advantage of that, but you may have to do it through salary reduction as the way to contribute. You can't just write a check to your 401k
right.
type of thing. So, but there's time, and hopefully if you have the available resources, you can just increase your withholding.
That's right. And you mentioned about being 50. There are catch up provisions for people who are 50 and older. So if you're just turning 50 and you think you know the limit, it's probably higher if you're now 50 and older that you can
Yeah,
contribute
and
more.
wasn't there also with the Secure Act some there's some windows of even more
Right.
in very particular ages in the 60s as well. So,
Yep.
catch-up provisions, very relevant to talk about. So, okay, so you were going on to other things, and I just didn't want that to
No, that's
escape.
good. Those are good side notes to make. So that's heading for your future. I want to keep you out of trouble this year too. So if you have been either withholding from your income or paying quarterlies, check your income, especially if you don't have a steady income. If you are maybe a commission-based person, or maybe you had a sudden change of income, you're self-employed, make sure that you have paid enough into the system so that you're not penalized. There is a level there that the IRS gives you a little grace, but if you grossly withhold your income, especially if you do it more than once, you start to get penalized by the IRS. So check in with your accountant if necessary, but make sure you're paying your estimated taxes or your withholdings at a right rate.
Yeah, and it's easy to overlook the estimates or not. They you don't get a bill. Your tax preparer may have provided you some of these, but oftentimes they get stuffed in a drawer with the tax return. So,
It's true.
and you don't want to end up with penalties. So take advantage of, going back and thinking about that. And Jeff, you were also saying for business owners, sometimes there's a desire to think about bringing forward some deductions by spending some money if you had a good year.
Yeah, if you've had a great year as a business owner and you think that you have some capital expenses that you're, thinking that you'd like to or need to expand or maintain your business, talk to your accountant about Section 179. 179 allows you to take a full year, a full tax deduction in the same year that you spend the money, CapEx, capital expense. So let's say, for example, and this is just very, very general, but talk to your accountant to see if you fit the rules. Say you were in a construction business and you're going to need a new truck and you have the cash because you've had a great year and you have a lot of profits this year. It might be prudent to buy the truck now and take Section 179 expense and reduce your taxes and buy something you were going to buy anyway. Yeah.
And then
I'm not saying to buy a new truck if you don't need it.
Yeah.
Jeff Perry never said that.
Right. That's not what I'm saying. Well, let's talk about some other things that are very common issues. And many times people throughout the year will have capital gains that they've incurred. And as you get close to year end, you're very mindful of, I'm going to have a tax consequence from those capital gains. So it is often a good technique to look at, are there losses that we could use to realize to offset some of those gains? Many times with the losses, you can find a very easy substitute. I'm going to sell this bond fund, but I'll replace it with that bond fund. That's almost the same idea. I'm going to sell this stock, but I'll buy this fund that is dominated by that stock, or whatever it might be. You can find ways to.
You have to follow the rules because there's a substantially similar rule. You can't replace it with something substantially similar, but to your point.
There's also the wash rule that you have to be mindful of. You can't buy that back too quickly if you just want to step out of a position for a time. Options can be a tool as well if you have a stock that you really want to have an exposure to, but sometimes an option can give you a way to have exposure without necessarily still owning the stock. Anyway, there's specific rules. I'm not trying to give tax advice, just a reminder. This is something to pay attention to. Additionally, there are other things that people need to think about. One of them is, you talked about contributions, Jeff, for people who are of retirement age. If you're 73 and over, you have a required minimum distribution to be mindful of. Right. And, if you're a recipient of an inherited IRA, you also will likely have distribution requirements to be thinking of. The rules have gotten more complicated on this. And incidentally, we're going to have a great guest next week is it next week we're having Ed Slott, or is that for the following week? Anyway, coming up soon, we're going to have Ed Slott, tax expert.
Guru, yeah. Very interesting guy as well.
So we'll have some great content there. What else? Pardon me. Other things with a limited amount of time, because we're running out of time for this segment. Keep in mind that qualified charitable deduction can be a great resource. We'll talk about this more over the next few weeks. Definitely a great resource as a way to reduce RMDs, but if you have a charitable intent. And then you were talking about Roth conversions too, Jeff.
Oh, that's right. That's a whole segment as well. Yeah. I guess since we only have like a minute left, our best thought is to contact your advisor, go over some of these issues. If you have tax questions, contact your CPA. CPAs aren't too busy right now, so it's a good time to get in front of these things.
So, and if you need help, don't hesitate to reach out to us as well. We're happy to try to help you navigate some of these questions at amrfinancial.com. Jeff, thanks. Good segment. Until next time, everybody, keep striving for something more.
Thank you for listening to Something More with Chris Boyd. Call us for help, whether it's financial planning, portfolio management, insurance concerns, or those quality of life issues that make the money matters matter. Whatever's on your mind, visit us at amrfinancial.com or call us toll-free at 866-771-8901 or send us your questions to radio@amrfinancial.com.